Famous asset management company Vanguard has recently clarified its stance on the creation of Bitcoin ETFs. Despite a wave of excitement surrounding the spot Bitcoin ETFs entering the industry, Vanguard confirmed that it has no plans to create a Bitcoin ETF or any other crypto-related product. Don't forget to subscribe, like, and share, and let's start. In 2011, every investor dreamed of a 2x return, let alone a 100x. But crypto wasn't even a thing. All the old crypto people wish they had something like Bitcoin in their day. You're absolutely lucky to be here. Do not waste it. You won't get a better opportunity. It's 2024 and you currently live in the best time. Why? With just a smartphone, Wi-Fi, and capital, you can make hands-off profit. It's that simple. You don't even need a fortune to start. Let compound interest do its thing. Even if you have savings, start small. So lock in, make some smart moves first, then reinvest your earnings. Play the long-term game. You will not lose. Bitcoin supply shock is real. Bitcoin 2024 Bitcoin supply shock. Bitcoin mined past halving in 12 days. 5,400, 10,800 Bitcoin mined in 12 days, as minus 117,000 Grayscale Bitcoin sold by Grayscale, and Bitcoin bought by ETFs total 131,000. So Grayscale's sale was not that bad to be true, and basically the ETFs are buying back all of that, while the Bitcoin's mined is only 10,800, and once the halving is going to happen, it will be 5,400 alone. Next up, this is how I think equilibrium price settles post halving. I think Bitcoin buy and demand from ETFs settles down at an average of $60 million a day. Half of what it appears to be now. I believe that it runs for the year, giving about $15 billion of net inflows in the first year of the ETF, with just 450 Bitcoin a day being released, down from 900 a day to date. That implies just an ETF demand equilibrium price of 133,000 per Bitcoin, and I think you can safely factor in about 300 Bitcoin a day of selling in addition to the mined supply. So total daily selling pressure of 750 Bitcoin, implying an equilibrium price of 80,000 post halving. This is in normal market conditions when there is not a major dump of supply onto the market. And remember, the demand is now institutional and passive and smart, so the demand is not reflexing to the supply to the upside, but will hold itself back to the downside. So this implies large price spikes to the downside but slow grinds to the upside. And in addition to that, my calculation here does not take into account the following supply constructions that may arise as we approach and pass the halving. Miners putting Bitcoin on the balance sheet and thus lowering daily supply. I think this could account for about 100 Bitcoin a day. Second, holdover rate, increasing, therefore less people selling as the price rises, and I think this could account for maybe 50 Bitcoin a day less. It also does not take into account the following demand triggers. As 1. Passive flows are larger than I think, and income funds start coming in once options are active. 2. Asset managers educating the downstream to sell this asset faster than I think will happen at this point. 3. Big buyers like Michael Saylor showing up and adding in 10 to 20 million of extra buying pressure daily. 4. Retail getting smart and adding buying pressure earlier than we think as the pivotal from other assets starts. 5. A million other possible demand spikes. So in summary, I think at the worst case, you'll have about 750 Bitcoin being sold into the market daily post halving, and at the best case 600. You may also have the buying demand range from a worst case of 60 million a day to 100 million a day. This implies an equilibrium price that ranges from 80,000 to 167,000 once the demand shock meets the programmed supply shock. And this also does not take into account acute spikes in demand, which is the short term could send the price much higher due to the multiplier effect. And it's a wide range, but I think a price above 100k is more than likely in 2024. Next up, a recent Vanguard report says they're refusing to allow spot Bitcoin ETFs because it's an immature asset class, it has little history, it has no inherent economic value, it has no cash flow, it can create a havoc within a portfolio. Have fun staying poor, Vanguard. Just in $7 trillion, Vanguard says they are not allowing spot Bitcoin ETFs because it is an immature asset class that has little history, no inherent economic value, no cash flow, and can create havoc within the portfolio. I never understood Bitcoin UTXOs for a very long time. Believe it or not, it took me an entire cycle and a lot of questions to a bunch of maxis, but I'm here to simplify it for you. Think of it like receiving change. Someone sends you 4x 0.25 coin, but you need to go somewhere with fewer coins. So you go to the bank and make it 1x $1 bill. Life is better this way because you don't have to carry so many coins. UTXOs are similar. Every time you receive Bitcoin, you receive it in small chunks and across multiple addresses in your Bitcoin wallet. But what happens when transaction fees are too high? The Bitcoin in your address might not be enough to cover the transaction fees, as making it unusable. You have multiple Bitcoin addresses with the small Bitcoin amounts that need to be combined first, charging you more transaction fees. Both scenarios will charge you too much fees. That's why you consolidate all those smaller Bitcoin amounts into one address, and some people make it a habit to consolidate their Bitcoin to 0.1 Bitcoin or 0.25 Bitcoin in one new address within the Bitcoin wallet. This way, you can cover high Bitcoin transaction fees in the future, and so make it a habit to combine your Bitcoin and manage your UTXOs. Next up on the radar is Bitcoin is likely consolidating from here between $37,000 and $48,000 for the coming months. In this period, altcoins will have their time, and the real impact on the ETF is going to come in the next few years, resulting into a price of Bitcoin going to $300,000 to $500,000. Another parabolic move before the halving in April 2024 would be unprecedented. The green 0.618 to 0.786 Fibonacci zone has already been flipped to support after a week of 0.786 and successful subsequent test of the 0.618. Historically, always a parabolic move followed directly. After announcing it will not offer Bitcoin spot ETF, Vanguard explains their reason for this decision. So despite a wave of excitement surrounding spot Bitcoin ETFs entering the industry, Vanguard confirmed that it has no plans to create a Bitcoin ETF or any other crypto-related product. In a recent Q&A, two Vanguard leaders, global head of ETF capital markets and broker and index relations Janelle Jackson and head of brokerage and investments Andrew Kojewski, shed light on the company's decision. As Jackson noted that given the current state of cryptocurrencies as an asset class, Vanguard does not plan to launch its own Bitcoin ETF or any crypto-related products. The company executive said it considers a number of factors when deciding which investment products to offer, including whether they believe the products have lasting investment value and meet their clients' needs. Despite a growing controversy surrounding Bitcoin and cryptocurrencies in general, Vanguard does not currently believe they have an appropriate role to play in long-term portfolios, according to the statement. So Kojewski explained that investors have so many options these days about where to save for retirement, where to invest for their children's education, and where to keep emergency savings. Investors who come directly to Vanguard do so because they know their interest come first, according to executive. While it would have been easy for Vanguard to allow full access to cryptocurrency-related products, as the company has deliberately structured itself to meet the needs of the investors' clients, as many of whom are long-term buy and hold investors, according to the statement. And Jackson added that in Vanguard's view, cryptocurrencies are more speculation than investment, and according to the statement, this is the basis for their decision not to offer crypto products, although crypto is classified as a commodity and it is an immature asset class with little history, no inherent economic value, no cash flow, and can create havoc within a portfolio, according to Jackson. This is all the information we got on today's video, so don't forget to subscribe, like, and share. See you in the next one, and peace.